Stocks temper their inflation expectancies on copper, pounding London World stocks headed for their first weekly gain in a month, and Wall Street becomes set to open higher on Friday on hopes that slides in copper and different commodities ought to position to break on runaway inflation. The week has been marked by steep declines for commodities on concern that the sector financial system is calling shaky and that hobby price hikes will harm growth, which in flip is prompting traders to cut inflation expectancies and pare back a few bets on the size of the hikes. Inflation will stay accelerated and above target, however it is more and more in all likelihood it'll start to top over the next few months. Andrew Hardy, funding supervisor at Momentum Global Investment Management, stated. Markets may want to take that reasonably nicely. There may be potential for recovery later in the year. US S&P futures rose 0.9% and MSCI's World Equities Index became up 0.5% at the day and a couple of 0.5% at the week, placing it up for the primary weekly gain in view that May. Copper, a bellwether for economic output with its extensive variety of business and creation uses, is heading for its steepest weekly drop since March 2020. It fell in London and Shanghai on Friday and is down more than 7% on the week. Tin fell by way of nearly 15% on Friday, taking losses this week to a file 25%, as traders fear that slowing financial growth will reduce call for the steel used in solder for electronics. Brent crude futures rose more than $1 to $111.28 a barrel on Friday but stay down 2% at the week and 10% on the month, even as benchmark grain prices sank, with Chicago wheat off greater than 8% for the week. ORGRA. Gold was up 0.2% at $1,826.30 in step with ounce but become heading for a second instantly weekly fall. The charge drops have supplied some remedy to equities, in view that power and meals had been the drivers of inflation. European stocks jumped 1.5%, on path to post small weekly gains. Britain's FTSE rose 1.3%, additionally showing a small uptick on the week. For long-term traders, the tale has no longer modified. Falling markets provide greater appealing valuations on high first-rate businesses with an aggressive side. Lewis Grant, senior portfolio manager for international equities at Federated Hermes (NYSE) FHI, stated. The Federal Reserve's commitment to reining in 40-year high inflation is unconditional, U.S. significant financial institution chief Jerome Powell told lawmakers on Thursday, even as acknowledging that sharply higher interest rates can also push up unemployment. Germany is heading for a fuel shortage if Russian gas materials remain as little as they're now because of the Ukraine war, and sure industries could need to be closed down if there isn't enough come iciness, Economy Minister Robert Habeck informed Der Spiegel magazine on Friday. Ukraine mentioned Russian forces had fully occupied a city south of the strategically critical city of Lysychansk in the Jap-Luhansk vicinity as of Friday. Bonds rallied hard on hopes that bets on aggressive rate hikes ought to be curtailed, with German two-year yields sliding 26 foundation factors on Thursday of their biggest drop for the reason that 2008. The German 10-year yield changed into down 4 bits per second on Friday after slumping 29 bits per second on Thursday, and turned into heading for its first weekly drop in view that mid-May. GBD, EUR. The benchmark 10-year Treasury yield won 4 bits per second to a few 0.1076%, however, after falling 7 bits per second on Thursday. U.S. bond price range suffered their biggest outflows when you consider that April 2020 inside the week to Wednesday, whilst equities lost $16.8 billion as markets had been caught in most bearish mode, BofA's weekly analysis of flows confirmed on Friday. The U.S. greenback has slipped from ultimate week's 20-year highs. The euro gained 0.23% to $1.05470 and the U.S. currency become flat at 135.3 sen. FRX. The battered yen has steadied this week and drew a bit help on Friday from Japanese inflation topping the Bank of Japan's 2% goal for a 2D straight month, placing extra pressure on its ultra-easy policy stance. MSCI's broadest index of Asia-Pacific shares outside Japan rose 1.1%, helped through brief dealers bailing out of Alibaba NYSE, BABA, which rose nearly 6% amid hints that China's era crackdown is abating. Japan's Nikkei rose 1.2% for a 2% weekly benefit.